Growth is slowing, the Fed has no reason to move, and housing just caught its first real breath in weeks. Welcome back to RealPage Economy Express. Let's start with a big picture. The Atlanta Fed GDP Now model just marked first quarter growth down to 1.2%, less than half of where the estimate set back in February. Consumer spending lost steam, and overall read has been drifting lower for weeks. The economy is still growing, but it is grinding, not cruising. Now, that ground level slowdown showed up clearly in the beige book. Most districts reported only modest growth, and businesses across the board shifted into wait and see mode. The hesitation was not random. Energy costs are up, the Middle East conflict rattled supply chains and confidence, and nobody wanted to step up or invest ahead of more uncertainty. Wages moved up modestly, prices moved up moderately, and the outlook stayed cautious across most of the country. On the inflation side, the Producer Price Index brought a rare piece of good news. Wholesale prices rose well below forecasts. Gasoline drove most of the damage on the headline, but core wholesale prices were nearly flat once you strip out food and energy. Inflation is not accelerating broadly, it is concentrated in energy. Now, the labor market is telling a similar story, still intact, but showing some wear. Jobless claims came in below expectations, and layoffs are not the story. But continuing claims ticked higher, meaning people are taking longer to find work once they lose it. Industrial production slipped in March, capacity utilization fell further below its long-term average, and the monthly read was soft across most categories. The first quarter as a whole was decent, but March was a clear step back. Housing is where things got interesting and may be the week's most encouraging data point. Mortgage applications jumped nearly 8%, purchase applications were up 10%, refinances rose 6%, and are running more than 50% above the same week last year. The 30-year fixed rate dropped to about 6.3% as oil prices pulled back following the ceasefire, and pending home sales moved higher in March, a signal that sidelined buyers are starting to act on pent-up demand. Existing sales are still struggling, hitting their slowest March pace in well over a decade, but the median home price climbed to a fresh record high for the month. Demand is there, but inventory is still the wall standing in front of it. So the numbers this week did not argue with each other. Things are holding together, but the margin for error is getting thinner. Thanks for watching RealPage Economy Express.